The SAIEE offers a 2-day course on financial management for engineers, facilitated by me, Tony Lydall. The course will be interactive. I will encourage questions to ensure understanding, and there will be a test at the end. How will this e-learning program work? The normal 2-day training version has been converted into 4 half-day sessions, which will be presented in live webinars over 4 days. Each session will consist of 2 modules with a break between the modules. If you participate in all 4 sessions, you will be awarded the standard 2 CPD points. Why is knowledge of finance important for engineers? It's the perpetual challenge, because engineering costs money, and those finance people have to provide it. And don't they see the world completely differently from the rest of us, and use finance terms and demand analyses that are difficult for us to understand? But seriously, why do businesses exist? Simply, the sole purpose is to maximize wealth. There are few, if any, business owners who go into business to get poor. So what are we going to cover in this program? We're going to introduce the concept of business finance. Then we'll talk about those things called financial statements that you hear about and are difficult to understand. Once we understand them, we'll be able to do some analysis on those financial statements to understand how well a business is doing. All these records that end up in the financial statements have to be captured and processed through some form of accounting system, and we're going to look at a few of those. One of the key elements in any business, particularly a business for profit, is that we have to understand the costs. So we're going to look at the different versions of cost accounting, and we will make a point of knowing how we can establish exactly the costs of our products and our services. Businesses have to look into the future, so we will be looking at process of forecasting and budgeting. And of course, we're always held accountable for our budgets. One of the key problems in forecasting and budgets is understanding the true cost or total cost of ownership of products and services that we pay for. So the section 7 will look at the total cost of ownership. And lastly, we will go into the question of project finance, because much of what we do in engineering type businesses is project related. Business is all about the money, the money, the money, as the song says. And so it's important that we really focus on what is happening with the money, that it's properly accounted for and recorded and reported on, and obviously provided. The financial process involves those 6 steps, and we will look at each of those through the course so that we understand what has to be done. We have 3 main financial statements, the ones that are normally published. The first is that famous balance sheet. The second one is the income statement. And the third one is the cash flow statement. And we will spend some time understanding each of those. The balance sheet is very simply a balance between what are known as the assets of the business and the other side of the balance, the liabilities and the owner's equity. And at the end of our course, you will know what all of those things mean. What happens in terms of the profitability of the business is shown up on an income and expense statement, and we will unpack that and fully understand where our revenues came from and where our expenses went to and what profit, if any, we had. The cash flow statement deals with all the flows of cash into the business, which, as we will explain, is not the same thing as revenue. The sources of cash are from our operations, and of course, we spend money, cash, on our operations. We also spend some of our money on investing in the business, and projects would be an example of an investment. And hopefully they produce some income. And lastly, we need money to start the business and to keep the business running, and it's raised by funding, and funding unfortunately costs money too. I mentioned analysis. We use a series of ratios. There are 4 main types that we will be analyzing and understanding: liquidity, solvency, efficiency, and whether we are doing that thing the business is supposed to be doing, making a profit. We have to understand the need for keeping records, and there's just an example of an old-fashioned set of files that gives you an idea of the number and types of records that have to be kept. All the accounting systems we're going to look at are based on the fundamental accounting concepts. I'm not going to go through all of them now, but one of them is consistency. We need to be consistent. We look at matching, which means that income and expenses are matched from a time point of view. Obviously, as we've mentioned before, everything is measured in money terms. When we're reporting, we report on values that are material. And the biggest thing from financial reporting point of view is this business going to be a going concern, which means the business in business next year. The accounting systems we're going to delve into include financial accounting, which is the external reporting type system; management accounting, which is the form of accounting which we as managers of a business need so we can focus on operations, on the standards that we have to apply, how we're performing against our budgets, variances against budgets that are significant and material, and how we help managers to run the business. Cost accounting is vital. If you don't know the cost, how can you understand the business? So the first stage is to determine the costs of your products and your services. If you are able to determine them, you've got a chance of controlling them. If you are in control of your costs, you can make meaningful decisions. If you are able to do all of that, you can determine proper selling prices. And lastly, it gives you an opportunity to control your costs. So that's why cost accounting is so significant, and we look at those systems. Forecasting is a big challenge for us because nobody can really see into the future, but we need to be able to do so. And we will spend some time in looking at how you make forecasts that are any use. I mentioned total cost of ownership, and this slide indicates the challenge. For many of us, what we see is the visible cost at the top. And you can see that in a common situation, only 15% of the costs are visible. The rest, 85%, are invisible, and the question that is always asked in establishing the total cost of ownership is, what are those invisible costs? And the final section deals with project finance. It's the question of how you set about the pre-finance, making sure the finance is available. The question of actually financing it when you're doing the project, and the post-finance at the end of it. And that wraps up the program, which, as I said in the beginning, is going to be presented in 4 sessions, 8 modules, 2 CPD points, and all the information, the rest of the information you want about this is available on the SAIEE website. I look forward to joining you for Finance Essentials for Engineers. Look out for when it is going to be available.